decades.
Deputy Cullinane.
Margaret Caherlock, Mr. Moore, and first of all, I'll come to you. Short, sharp answers if you can, because we are working to a clock here today. If I can start with the GNI star, I think you said it gives a more accurate picture of the market value of goods and services in this state. It's more reliable than GDP. Is that correct?
Yeah, it takes some of the peculiarities that gave us distortion of 26%, and it gives us a clearer picture.
Is it more reliable than GDP?
As an indicator of what's going on in the real economy in Ireland, yes, I think it's...
Yes, so it's more reliable. Does that mean then the GDP has proven, unfortunately, in this state to be unreliable in terms of the measurement?
Well, I think as Mr McCarthy has already said, I mean, there's lots of countries facing this challenge about, you know, the impact on statistics.
And we're focused on this country and this state.
Deputy, I take that point, and that's why, you know, in the immediate aftermath, that you know, kind of a very expert group was looked at to see this. So there is a comparability. Sorry? Sir John.
No, sorry, just stick with you first. No, sorry.
GDP is compiled absolutely correctly, but it overstates our living standards.
Thank you. Now, what you said, Mr. Moran, is that obviously GDP is still used for the purposes of reporting to international bodies. So GNI star would not be the measurement that would be used. It would be GDP. Isn't that correct?
That's correct. Yeah.
But it's more than that, isn't it? Because is GDP not what is used to calculate the fiscal rules? For example, the debt-GDP ratio, which Mr. McCarthy just went through a couple of moments ago, is still GDP. It is not GNI star. Is that correct?
It's GDP, yeah.
Yeah. So are we then essentially calculating the implementation of rules based on unreliable measurements? And maybe Mr. McCarthy can answer that question.
It's our legal obligation. Everything from the Stability and Growth Pact to fiscal rules is done on the basis of GDP, and that will always be the case because in most countries GDP is the correct measure. We are just unusual in an Irish context, given the size of the multinationals, given some of the more unusual
Mr. Moore
activity.
told us a few moments ago that we weren't unusual. What he said was that this was a phenomenon that's not unusual or unique to Ireland. So what you're telling us now is it is unique.
What I said was the extent of it in Ireland, the scale of it is much more so.
Is more unique in Ireland.
Is more unique.
Thank you. Yeah. So that's a bit different from what Mr. Moran said earlier. So if it is more unique to Ireland,
the scale of it.
The scale of it.
I don't think it's different. What I said other countries have it, but it's about extent. It's about scale.
Thank you. So we can differ on that, but whatever about that, it is the extent of it is certainly more unique to Ireland. Is it the case then that we have to calculate the implementation of the fiscal rules based on a measurement which is less reliable in this state than it is in other states?
Well, let me give you an example, Deputy. If we were using debt to GNI star, the fiscal rules would be even more binding than they are now.
And in other words, that's not the point.
It is.
No, sorry. With respect, that's not the question I asked. So if the question I asked could be answered, the consequences are not what I asked. What I asked was, are we calculating the fiscal rules on measurements which are less reliable in this state than they are in other states? I'm not interested at this point in the consequences. I'm interested in we have to work within the fiscal rules. We have to calculate how they work in this state, and we're calculating them in terms of certainly debt to GDP on GDP figures. You've just said that they are less reliable in this state because of the extent of how multinationals locate here in this state.
The information content...
Don't deal, please, with the consequences. Deal with the question I put.
I'm dealing with the question. The information content in GDP is much less in Ireland than it is in other countries. We are still obliged to use GDP by our legal obligations, and international organisations and financial markets will continue to look at GDP because it is the internationally accepted norm. So we're looking at GNI star because in Ireland it's a domestic measure. No other country produces it because it gives a better indication as to what's going on in the economy.
What I'm saying, Mr. McCarthy or Mr. Moran, is that we can have GNI star figures, we can put them into brochures, we can put them into documents, we can give them to whoever we want, we can put them up on bright lights, but in reality it doesn't make a damn bit of difference to how the fiscal rules are implemented because they are based on the GDP figures. That's all I'm saying. Is that correct? Thank you for that. Can I move now on to the debt to GDP rule in respect of the fiscal rules? Mr. McCarthy, you answered this earlier, and quite rightly you said that the rules are silent on how long it would take to get to the correction of the 60% of debt to GDP. It would have to be done at a reasonable or correct pace, I think were the words that you used. But the only absolute rule is that it would be done on the basis of 1/20th. That's the calculation. Are we exceeding that 1/20th ratio year on year?
Well, we did obviously in 2015, because the ratio came down by 25 percentage points.
And do we expect to exceed it again this year?
Only because of the very strong nominal growth.
So is it possible for us then, if we say, for example, we decided as a state, is it possible for us to say we will only reduce it by 1/20th? Would that free up extra revenue for the state?
No, because you have the other rule. The debt relates to obviously the stock, but the more important rule, the more binding rule, is the balanced budget rule. The need to achieve the MTO and the need to correct the MTO at a sufficient pace, which is 0.5% of GDP per annum. Both rules are binding, but while we may overcorrect or may reduce the debt ratio faster, we are still obliged to correct the structural balance at a sufficient pace.
So you're telling me here there's absolutely no wriggle room whatsoever in relation to slowing down the pace of repaying debt, sticking within the rule of the 1/20th, but maybe not overstating it. You're saying that's not possible because of the other more binding rule.
Exactly.
And you're certain of that?
100.0%.
Okay. If I can then move to the issue, staying on that issue, because it was raised earlier about the AIB shares and how they can be used or not used. My understanding of what it says in the briefing note, which is the PAC 32 R0653A2, page 19, if we get that up on the screen, is the briefing note from the department.
Okay.
PAC 32 R0653A, page 19. And it deals with the AIB receipts for capital spending, and it essentially says that because it's classified as a financial transaction, it's a substitution of one form of an asset for another. In other words, it's seen as shares to cash is seen as equal. Is that a correct interpretation? Can I ask then, shares to capital, would that be seen as like for like as well? Can you explain maybe why not? Because it would seem sensible that that would be the case, but I'm trying to figure out why that would not be the case, if you can help me.
Because shares are regarded effectively as just a way of holding cash. And when we put the money into AIB, it wasn't regarded as spending, because we were just holding cash in another way.
But is it not seen as an asset? Are the shares not seen as an asset?
They're seen as an asset in the same way as cash is.
Yeah, but they're still seen as an asset. So a capital...
But capital isn't seen as an asset. If you buy something capital, it's seen as spending. When we bought the shares in AIB, it wasn't seen as buying an asset, it wasn't treated as a capital purchase.
Yeah.
And that's why when we get the money back, it's not treated as...
Have we...
I'm not saying that... Logic might say that the other was, but I can't just... I can't change the rules. They're the rules.
I understand that. And can I just ask, I know you can't change the rules, but have we sought clarification from the Commission on that rule?
We did very much at the time, because... and we went through it in a lot of detail at the time we put the money in, and on various occasions since, on the various financial transactions.
Is that something that could be shared with us? Could you give us a briefing note on that clarification you got from the Commission?
Yeah, I can give you a briefing note.
It would be useful, because it is obviously, you would be conscious as well, even at the National Economic Dialogue exchanges, there was a lot of discussion about the need to invest in capital. I think everybody's on the same page, so what we're trying to do is look at ways in which we can increase capital spending, if possible. Yeah. So if it's not possible under the rules, that's fair enough, but we just need absolute certainty. Yeah. My final question, and final topic anyway, so how long have I got left?
2 minutes.
2 minutes, okay, is the marginal tax rate. We're hearing an awful lot about that, the marginal tax rate above 50%. How many PAYE workers are paying a marginal tax rate above 50%?
I think the way it breaks down is that there's about 20% of income earners pay at the top marginal tax rate.
It's less than that, but I have to figure. I just wanted to get your confirmation on it. So the marginal tax rate would actually be the income tax rate, the USC rate at the top, which would be 8%, and then the PSRI rate. So for those who earn between 32,800 and 70,000, the maximum that they would pay is 49%. 40% on a portion of their salary on PYE, 5% USC and 4.1% PRSI. Isn't that correct? So they would be under the 50%. So only those who earn over 70,000 will be over. 51, yeah. So my calculation is, and this is from the Revenue Ready Reckoner, and the most recent one is that it would be 359,754 workers who would be above that. And that would be those who earn above 70,000 who would pay above the 50%, which is 14.3%.
I was thinking in terms of who pays at the top marginal tax rate of 40%, which is around 20% of
14. So if my figures are right,
I'm not disputing them.
Okay, so 14.3%. So then, if we were to reduce the marginal tax rate below 50%, what we're doing essentially then is giving a tax cut to the top 14.3% income earners. Would that be fair?
Yes.
Yeah. Okay. And is that the policy at the moment?
Again, we don't comment on policy matters.
Well, I know, but is it? But in terms of the what's across your desk, is it something that you have had to do some work on? Calculate the costs of maybe doing this. Calculate how many people are paying it. You'll understand why I'm asking it, because it is something that is new in the public domain. It will cost us money. So if this was followed through, it would be a cost to the Exchequer, but it would be only the top 14.3% of taxpayers who would actually benefit.
Deputy, I can't comment on policy.
Okay, but you accept that it would only be the top 14.3%.
If you're cutting tax at the top rate, it affects the proportion that's chargeable at the top rate.
Okay, and just one final question, and if I can, is in relation to the steering group or the working group that was set up by your department on insurance providers. When was that set up?
That was 2016.
2016, yeah.
And reported towards the end of. Sorry, Anne.
Yeah, it was set up in 2016. The first report was at the end of 2016 on the motor insurance.
Yeah, and it was a working group. So it was the insurance working group was called. Yeah. So what function did that have? Terms of reference are in the public domain, and it was to look at the cost of insurance and to come up with recommendations to reduce the cost of insurance. Did it examine the possibility of price fixing? Do you know?
I don't think it looked at price fixing. As far as I know, it did not. I mean,
so this was the government working group that was to look at problems in the insurance industry. Well, there was allegations of price fixing. There was a raid, as you know, on some of the main insurance industry. Was that something that the CCPC did independently? So the working group then essentially not focusing on what was the real issue, if it wasn't focused on price fixing, which was the one issue that now seems to be the big problem? Okay, just to say that the working group was in contact with the CCPC. I don't know how many C's there are. CCPC. I got two ACs there. But anyway, the working group was in contact and had numerous meetings with the CCCP. And in as much as the CCPC is independent in the functioning of its duties, the working group would have taken a great deal of effort not to interrupt or disrupt the capacity of the CCPC to look and raid and whatever else. And similarly, they would be very careful not to involve what was essentially a policy group. I wouldn't expect them to do that, Ms. Nolan. I wouldn't expect them to usurp the role of the CCPC, but I would expect a high-level working group established by the department to be examining what are the real issues. Now, it's possible, because you may not just be aware of it, it's possible they did touch on and examine the possibility of price fixing. Is it possible, because this working group was established under your department, Mr. Moran, isn't that correct?
That's right.
Did it report back to you?
It reported back to the government. To the government, as chaired by the junior minister, as distinct.
So can you furnish this committee then with any report or any instances where there was any reference to price fixing? Is it possible for you to find out if that working group did examine that issue?
Let me go back and consult.
If you can, and report back. Yeah. Thank you.
Okay.